right, so good afternoon, everyone. So I'm Royce Aguilar, Deputy Head of Retail Research here in First Metro Securities. Welcome to another Philippine stock market wrap-up. Okay, so while you're wondering, why are we doing this today, no, and not tomorrow? Because we have actually another event, not tomorrow. And we are interviewing si Robinson's REIT, RCR. Okay, so also please tune into that. So let's start our stock market wrap up for the next slide. We will discuss the usual, no? What happened this month so far. Of course, we have one more market day tomorrow, but what has happened in the 30 days of August, and then what to watch out for next month, what are our long-term stock picks. We will also show you some traders playbook reports that we like right now. Next slide. All right, so what happened in the month of August? So as you will see on the next slide, it's actually a good month. Okay, di ba kahit sinasabi nila ghost month, we actually saw the market rally by 6% to close to close at 6,690.27. Now, if you take a look at year to date, the PSA is just down by 6% also. We reached as high as 6,800 and we pulled back to 6,690. Diba? So there's actually one reason on what dragged the market. Still dragging the market, no? In depreciation of Philippine peso. If you take a look at dollar alone, there's this dollar index na tinatawag. No? Dollar index even surged to a new year-to-date high yesterday. No? So that could affect the peso moving forward should interest rates continue to rise in the US. Diba? We discussed this in the previous stock market wrap-up, the effect ng higher interest rates. And then what supported the market, there were a lot of reasons, of which what made the market rally by 6% month to date. There are signs of global inflation peaking, diba? Strong corporate earnings from Philippine companies. I will actually show you in the coming slides kung yung mga companies that outperform. But before that, I would like to mention better than expected oil remittances also drove the market. And lastly, you're already seeing revised forecast, upward forecast for the growth of the Philippine economy. So that's good. So on the next slide, on the next set of slides, so we will discuss yung mga companies that showed their earnings. Actually, this is only PSEI, no? But of course, this already accounts for bulk of the companies in the Philippines, and this represents how strong the corporate earnings were back in first half. But it's not all rosy, no? That's just discussed per sector. That's why I dissected this per sector so we could appreciate more, which actually outperformed. So first are the banks. So you will see on the right side that their earnings did not only grow, but it exceeded estimates of analysts. Diba? We always tell you that it's not enough for corporate earnings to grow. It has to exceed estimates or at least be in line for the stock price to either appreciate or outperform the market. So for the banks, it outperformed in terms of earnings, right? So we saw loan growth really go beyond expectations. Tapos yung mga provisions for bad loans are now lower than expected, especially the economy is reopening. There are a lot of businesses trying to reopen and implement new business models at this kind of pandemic, right? So that benefited the listed banks. So of course, SEC-based still included, because in the first half, included sa PSEI, right? So that's for banks. Next slide. You will see here holding companies. Ito mga holding companies. So kind of a mix, but mostly ahead, right? So of course, for Ayala Corp, it's ahead because of BPI, because of the recovery of its yung mga property business. But of course, on the next slide, not yet, no? On the next slide, we will show you kung bakit yung Ayala Land underperformed. But in terms of the strength of the mall recovery, it's there. That's why you really see select names also outperform. So for AEV, because of the power business, because of the feeds business, it underperformed. AGI, of course, yung gaming, yung quick service session businesses outperform. You can really see also MPI, GTCap, who is usually just in line with expectations, now exceeding expectations, diba? Because of, for example, for GTCap, yung automotive, tapos yung banks, nagdala talaga. For SM, of course, retail, diba? All of the reopening sectors outperform. So there, next slide. So industrial, so we have Meralco, Aboitiz, Power outperforming estimates. So for Aboitiz, despite lower earnings, it actually exceeded estimates because of the better than expected recovery sa power generation business. Diba? Yung power demand ng Philippines, of course, ang taas ng presyo, but it's a need. Sometimes it's a need, and of course, there are winners of that, like power generation companies. If you take a look at AC Energy underperforming, right? So this is maybe a case of a lot of companies expecting a lot from a certain company. So yung room mo for error is small. So maybe that's what happened with AC Energy. But nevertheless, the growth prospect is clear. For GFC, one of the companies that really exceeded expectations. So good job for the management. Of course, that's one of our top picks. So it's good that, especially for those who are holding the said company. Then mostly in line na lang siya. For Wilcon, of course, Wilcon, one of the relatively expensive names, but it continues to outperform earnings and it warrants an expensive valuation at this point. So next slide. Ito property, as you mentioned, si Ayala Land. This is a good example, no, of what's happening in the property segment right now. So usually, diba, sa property segment, we have three main segments: the residential, office, and malls. The malls right now are seeing significant growth because of the reopening, diba, back to school. So you can really see the outperformance of the likes of SMP, HRLC, diba, yung mga heavy sa malls. For Ayala Land, it has a lot of malls, but the problem is most of its operating income comes from residential. And residential is not doing so well right now. Even yung kay SM, yung residential segment niya, it underperformed. But the mall segment lifted the earnings. For Ayala Land, the mall segment outperformed, but it wasn't enough to lift the total earnings. Kaya yung earnings niya came in below than expected. So that's the story. Next. Ito services, ICT, PLDT still outperforming. Good thing, diba si PLDT or BIPIC as compared to the Globe na hold lang sa amin. But nevertheless, you can really see how much growth is there, diba? Despite what it may seem like a slowing economy, you can really see a lot of companies outperforming. For Converge, you can really see why it's getting sold down. And of course, technicals will tell you breakdown siya ng breakdown, but fundamentals, the residential subscription additions is growing slower than expected. Okay, so that's the story. Okay, so next. Okay, so now we're done with earnings. I hope you guys got a bit of a picture of what's happening sa corporates natin. So for technical analysis, it's pretty clear that the market is trying to recover. It's creating higher lows, which is good, but it has to create higher highs. So to create a higher high, it must trade above 6.9 at this point, diba? And it's crucial to break above that 200-day MA, yung red line that you will see there, for the market to go above 7,000, reach 7.2, which is our resistance. Nevertheless, right now, looking at chart, at least in the short term, it's good to buy and pullbacks, but we must stay vigilant. That's why yung tight stops that I set there, it's like I've said, it's tight. So you can set your cut losses below 6.4 if you want to be specific about it. If you're long term, diba? If it trades below 6.4, wag ka muna bibili because that may result in further downturn. So we will guide you every week. Every week, iba yung statement that we say there in our technical analysis. So please feel free to take a look at our weekly report. So next slide. So what do you watch out for in September? For September, again, no, it seems like yung COVID-19 cases are showing signs of weak. Sana hindi na umakyat. Still to watch out for yung movement of USD PHP. Because if you ask me personally, that will determine the sustainability of the market rally right now. Diba? The market is currently pulling back. But when will the market go back to 7,000 levels? One reason is if the peso strengthens. Diba? So that's why a lot of investors right now are looking into the statement of US Central Bank, because if mas malakas sila mag-raise ng interest rates, that it will not be good for peso, because once you raise interest rates, that will strengthen the currency of the country, raising interest rates stronger, which is currently US. So continue to watch out for USD peso. So in terms of economic data, there we go. So we have a lot of manufacturing all over the world, manufacturing data coming in on Thursday. You have inflation on September 6th. And then this is a month where there are a lot of central bank interest rate decisions. So must watch, definitely must watch. And as we've told you several times, it's not only how much they've raised interest rates, but what the language is moving forward. Because that's the language moving forward will be the one that the market will price in, because the stock market is forward-looking. Okay, so that's what the next bullet is all about. And the next bullet is mostly related to politics, no? Because politics is still a factor. Ano ba yung mga bills, laws ipapasa ng new government? I'm seeing mining law regime, right? We mentioned in the previous presentation na mining IT-BPO yung one of the likely outperformers. So let's see. Geopolitics, I'm referring to the likes of Russia-Ukraine, which is still ongoing, and then China-Taiwan, which is kind of the side of the geopolitics I'm looking at that is not seen by a lot of people, investors, but I'm continue to watch out that space because that could lead to another black swan. So let's continue to watch that space. So next. So now we discuss our stock picks, diba? So not much difference. No, not much difference, but we have slight downgrades on select names. For SM, we already downgraded this one. But you can see base earnings kanina, diba, ahead of estimates because it has large exposure across sectors. So we see the recovery to be robust. And it's ongoing, right? You can really see the strong bounce ng SM from 790 ngayon nasa 870, 880. And you still have upside. Okay. For Jollibee, we mentioned earlier how strong the earnings is. Right now, Jollibee is trading at 240, so less than 10% upside ka na lang. So this is more of a buy on pullback. If you're a long-term investor, if you're a trader, just follow the price action. We have a previous playbook for Jollibee. But just to talk about the fundamentals about it, why? Besides the recovery of the overall Jollibee operations, we're seeing a lot of turnaround from its previously loss-making businesses like Smashburger, Coffee Bean, diba? So personally, I'm working from home. I'm here in the US right now. I'm seeing a lot of Jollibee branches. Nandaming tao sa loob. Diba? And the nice thing about it, hindi lang Pinoy. It's not only Pinoys eating, it's not only Filipinos eating Jollibee here. You're seeing a lot of Asian, non-Asians enjoying the food. So, yun. So, it's good to observe, diba? At least I'm seeing outside the operations outside the Philippines. I'm seeing also Smashburger on select states that I'm visiting. So, next slide. For RHI, this is one of the stocks that a lot of investors are not seeing, mainly because it's already out of the index. And I'm basing that because of the volume. The volume is significantly lower. But the price action cannot be avoided. That it's getting stronger. And in terms of fundamentals, I like to focus on the second point that amid a rising inflation environment, you should turn to retailers which can pass on costs to mid to high income target market. We mentioned before na this statement doesn't mean the mid to high income target market are not affected by inflation, but relatively they're less sensitive. And if you take a look at the earnings in RHI, it doubled as compared to last year, outperform estimates. So there's still time to buy this said stock. For Yalaland, we haven't downgraded this yet, but as you've mentioned, it underperformed earnings because of the residential segment. But if you take a look at the price action now, it's significantly lower. It's coming to a point where it's getting cheap already. If you take a look at yung Ayala Land historically is expensive. But right now, it came to a point that it's now relatively cheap, right? And Ayala Land is still Ayala Land. It's just that it's seeing weakness right now in the residential market because most of its operating income comes from the residential segment, okay? Nevertheless, it's still the second largest small developer. And that's where most of the growth will come from and actually came from. So something to buy on dips, right? So Ayala Land. Next slide, RLC, as mentioned, ahead of estimates. Now, if you're taking a look at may upside pa ba si RLC? Yes, our target price is 25. So RLC is one of the more balanced companies. Balance of office talaga, malls, and residential. Good mix. If you really want a property play, RLC is a way to go. And then on the next slide, SMPH is one of the companies na we lowered the target price to 43. But currently it's trading at 36, nearly 37. So you still have upside. And the story is simple here. SMPH, most of its operating income, malls. That's the strongest segment right now in the property sector. Okay. And in terms of beta, in terms of volatility, it's less volatile than the index. So if you're fearful of the market right now, because for example, First Metro Securities is telling you not to be aggressive, and probably your next question, if you don't want us to be aggressive, which do we buy? SMPH is one of those. SMPH is our top pick in the property sector. Less volatile, and in terms of fundamentals, you could really see for yourself the buying recovery ng malls. And then for the financial sector, ito yung sector that underperformed in terms of earnings, right? And we would like to share with you which names do we like. Actually, all the banks index we like. But for example, we will discuss later yung mga upside, etc. But for BPI, less than 10% in the upside. So this is more of a buy on dips. But we would like to explain fundamentally that its digitalization efforts are continuing to bear fruit. And managing your cost is the name of the game right now. And BPI is doing it well because of its digitalization efforts. Next is BDO. We mentioned before, strength in numbers, daming branches, reopening play. Of course, yung what hounded or what clouded the market sentiment in the past earlier this month, yung kay Dennis Uy, yung exposure, but it's been cleared up, right? And BDO is rallying again. So, diba, swerte sa mga nakabuy on dips. So, going back to its fundamentals, we forecast a strong underlying performance for the bank, 13-20% growth in earnings this year, next year, expect. Okay? So, next slide. SECB 118, this is more, if you followed, diba, if you followed our buy on dips recommendation after you got moved from the PSA, probably have made some returns right now. And right now, are you too late na ba? Hindi pa. Kasi target price namin is 118. Okay? We can disregard the second point because nag-remove na siya sa PSCI. But the first point is, we expect SECB to deliver an earnings per share growth of 35% per annum in the next 2 years, driven by double-digit loans growth, expansion in net interest margins, and lower credit costs. Okay? So now, if you take a look at the next slide, these are the upsides na lang for our picks. Okay? So, for example, for SM, you have an upside of 70%, Yalaland 69%, SMPH 60%. No, actually for SMPH, mali yan, no? Dapat 36.90. So, probably around nearly 20%. For RSC, 30%, Jollibee 8%, RHI 18%, BDO 12%, DPI just 5%, SECB 29%. So you have a lot of upside, okay? And then for the next slide, here's the model port. We're proud because we're, in terms of our picks, it's outperforming the market. The market is down 6%. If you bought our picks weighted, meaning based sa market cap, you will outperform. If you bought it equally, mag-outperform ka pa rin. So we're proud of that. And then on the next slide, in terms of Traders Playbook highlights, we would like to share with you a couple of our picks. Actually, one si SPNEC. And there's actually a chart related, of course. No, wala yung chart related dyan. I would like you to visit our website for you to see the full report, the second page of that report, which will show you the actual chart. But to give you a gist, diba? Si SPNEC, based from our technical insight, that's our automated chart pattern recognition program. It formed this continuation triangle. It's a bullish pattern. And according to that, yung target price daw 2.04 to 2.12. Okay? So that's what a chart recognition platform is telling. So if you want to take a better glimpse of that, please visit our platform. Bloomberry also. Bloomberry, one of the names that have outperformed or surged past expectations. So it's mostly a fundamental play. So it's more of a buy. It's a buy call based on the outperformance of earnings. It's a no-brainer because you're seeing a lot of activity sa casinos, and especially right now yung restrictions sa departure arrival benefits yung VIP segment of the casino company. And then on the next slide, if you take a look at the hit ratio in Traders Playbook, it has improved. No, it has improved from 61% last month to 65%, given the strong market ng past month. So we're happy with that one. And of course, yung average year to date is positive as compared to market is negative though. So we're proud of this report ever since it got created. So we're hoping a lot of you have made some money from our reports. And then we don't only create buy calls, we also create sell calls, as you will see on the next slide. So yeah, so we have 3 sell calls that have done well and have saved a lot of investors, hopefully. A lot of investors or traders. All right, so this is the time I answer your questions. You guys have pretty good questions here. Okay, it's a good question. Kasi diba, I think we send this every morning. No? The question here is, what's the meaning of tell? Na if you take a look at what we send sa market updates sa Viber, it's at lang siya, parang 2 digits, no? 31, 29. Because the tell that we mentioned there is yung ADR, US ADR, that's US American Depositary Receipts. It's PLDT listed in another country, and that's their price. That's actually in dollars. Okay, so 31 or currently at $29.75. Okay, so I made it clear. So it's the share price of PLDT in the US because it's also listed in the US, si PLDT. So I hope I made that clear. The next question is, do you see DMC returning back to PSCI, especially that SCC got returned? Well, first of all, we have to look at it separately, right? But nevertheless, it's still a good question because DMC has a good chance, but it has to see some other names get booted out. The problem kasi is there's a rule na sa PSCI, it's usually what they use, no? That your market cap full market cap should be below 35. Diba? Para makapasok ka sa PSEI, kailangan hindi ka lang top 30, kailangan top 25 ka. Kasi that avoids the repetitive removal addition. That's what you want to try to avoid. So you have to be convincingly on the part of the PSEI na mataas yung market cap mo. So for DMC, it's not that enough. It's part of the top 30, I can tell you that, but it's not top 25 yet. Also, we have to see another stock na ranking 36. That's what happened with SecB. Nasa 36, 37 siya based from our analysis. Si SCC 24. So we have to see higher share price from DMC. We have to see other share price go lower. Yeah, so I hope I made it clear. The next question is it safe to hold on to REITs? So around 50% of portfolio daw niya sa RCR, around 5% REIT. So well, depends on your investment appetite. If I'm not mistaken, you're currently conservative. Maybe you are an investor na seeing a lot of risk in the market, or maybe you're just conservative. Nevertheless, yes, it's safe to hold on to REITs. No, there are arguments na yung REITs daw not giving enough yield kasi if you compare it to fixed income, if you compare it to inflation right now, parang kulang. Kasi yung yield 6%, yung inflation above 6%, 7%, diba? But we like to reiterate that REITs don't only give you dividend. The share price also appreciates. But not all REITs do that. That's why we recommend the bigger ones. Diba? A-REIT, M-REIT, RCR. So you actually have a good portfolio. Just to be transparent about it, yung top pick namin sa REITs right now is M-REIT. So we haven't changed yet yung target price. So M-REIT is still 21, right? So to answer your question, yes, it's safe to hold on to REITs. So M-REIT, RCR, if you want A-REIT na ang laki na ng pinolback, go ahead. So yun siya. Okay. Next question is the outlook of recession looming in the US. What will be the impact to the Philippine economy and stocks? What's the best stock to invest in the medium long term? Actually, based on the definition, it's actually recession. It's a technical recession in the US, but it doesn't feel like a recession because the jobs market is strong. There are cracks in the economy, but it's not a full-blown recession. What I'm fearful of is usually at the times like this, may mga cracks na, but bigla na lang may sasabog, diba? If you take a look at 2008, may mga cracks na sa economy, bigla na lang nagka-housing bubble, si Lehman Brothers, nawala, Bear Stearns, diba? So, right now, okay, there's technical recession, US, UK, but it doesn't feel like it yet. Maybe, sana walang black swan, but it could still happen. That's why our main recommendation right now is to not be too aggressive. So, we have to look at it objectively right now. What we're seeing right now is, sa Philippines, economic reopening. Okay, mataas yung cost. So, we can't be totally aggressive in all segments or sectors of listed stocks. So, you have to be picky. So, diba, yung banks, we have to recognize na nagre-recover economy, a lot of businesses trying to open up, tapos not property, but you have to prioritize SM Prime kasi mall segment yung mas nagre-recover, retailers, but not all retailers, those lang na that can pass on costs like RHI, Jollibee, expanding globally, locally. So that's how we look at it right now. We have to be picky, not buy everything. So that's what we're saying. I hope I made it clear. Any update on Dito? Well, si Dito, based on... That's a question. Are there any updates on Dito? Based on the recent news flow that I saw, it already has 12 million subscribers. But it's still bleeding cash. Of course, we've told that several times. That's the process. No? It has to spend a lot on CapEx because the market share of PLDT Globe is already tight sa mobile space. So it has to continue to market itself, to bleed cash, to really gain the subscribers. And then eventually, eventually their priority will now be profitability. So right now, I wouldn't put a lot of money on Dito yet, but I would definitely continue to watch that space because eventually, if it has enough market share, diba, the profits will come. But right now, I wouldn't put a lot of money on it yet. Diba? Marami pang pwedeng pagkakitaan dyan around, there are a lot of stocks, nearly 300, but it's not yet a top priority. Okay. But we should continue to watch for it, definitely. All right. Okay. Question is, do you recommend buying Philex at this level? Consider that mining sector is being considered by the new administration. Do you prefer buying nickel instead? It's a good question. The thing kasi right now is, yes, the mining sector in the Philippines may be poised to grow on a better pace. But the problem kasi right now is you have to take into account that the mining sector is based on commodities na priced globally. And commodity prices right now are not as strong as they were a couple of months ago because there's a fear of recession. There's fear of, di ba, higher interest rates affecting economic activity. Kasi di ba, pag tataas ng rates, yung borrowing mo, mas mahal kasi mas mataas yung rates. So that affects the overall economic activity. And if economic activity is not as strong, usually the commodities get weaker. So I would put this definitely on my watch list. Probably trading or buying the dips, but not being too aggressive at current levels. But the names I would watch for are the leaders. Diba? Sina nickel, Nickel Asia sa nickel, Philex, silver and gold, diba? So I would be picky about it and not buy all of the mining names right now. Okay, especially yung liquidity sa market is not yet sustainable na malakas. So you have to be picky, especially these mining names. Once liquidity dries up sa market, maubusan ka, baka mawalan ka ng buyers once you want to sell. So you pick the bigger names, the biggest names muna. Okay. Last question. Do you think Nickel Asia Corp is cheap right now? Would they be able to give attractive dividends? Yes. I think, to be honest, I think Nickel Asia Corp is, I wouldn't say it's cheap. It's cheaper, but not yet cheap enough to put a lot of your money onto it. I would try to buy a bit, not to be too aggressive about it. Definitely, they can give attractive dividends given how much they've earned. But basically, the growth of the company will slow down a bit in the coming quarters since yung commodity price of nickel has slowed down. But yeah, I think it's definitely for the long term because the fundamental remains the same, that yung nickel niya will be used, diba, sa electric vehicles and the fundamental is intact. But as an investor, even trade, especially for trade, you have to consider naman yung average cost mo. And right now, this is not yet the average cost na, it's not yet the price na you want to be totally aggressive. You can buy a bit. I don't want to be too aggressive about it. For SCC, okay, sige, last question talaga. For SCC, the question is there still upside for SCC? How many percent? Well, we don't cover SCC, but in terms of consensus price, let me try to look at it for you. I'm looking at the consensus corner report, no? Tingnan natin. Trying to log in right now. For Semirara, well, I think for Semirara, what we've been telling is this is you try to put your trail stops, right? What does trail stop mean? So parang for example, if your average cost for Semirara is 36, right now it's trading at 42, magsaset ka ng trail stops probably. Meron ka ng stop loss order below 40, below 39, something like that. Okay. That's the strategy I'm recommending. But to be fundamental about it, the consensus target price of SCC is 34. So that's a 20% downside. So a lot of analysts are expecting or are saying that nakasa fair value na si Semirara. So of course, in coal prices kasi right now are still relatively quite strong. But nevertheless, if I'm looking for upside right now, I have a lot of money, for example. I wouldn't put a lot of money in Semirara right now because it's a lot of money has been made already. Meaning, marami nang na-price in sa Semirara. Yung strength ng coal, yung pagkapasok niya sa PSEI, a lot of those have been priced in already. So, if I want to outperform the market right now, I wouldn't put a lot of money in Semirara at these prices. So that's what we're saying. Okay? So there. So thank you. Thank you, everyone. I hope to see you again on the next market wrap-up. And of course, please participate in all of our other events. Okay, so we have a lot of events, definitely our marketing, our social media accounts. Watch out for that. We will tell you which are next events. So thank you. And as always in First Metro Securities, it's hashtag your future first. This has been Roy Seguilar, Deputy Head for Retail Research. Thank you and enjoy the rest of the week.